Good morning, traders. This is Barry Wilkie with StartupTrading.com. It is 10 minutes till 9 a.m. Eastern Time on Wednesday, September 10th. So, looking back at yesterday's action, right? The NASDAQ drove down into lunch, right? Got some fills in those single prints below yesterday's low, and then just kind of found some footing, right? And just went right back up to the previous high of the day and settled out right around there. Looking at the ES, I think it was Cisco that reported after the bell. I'm not sure if there's anything else that drove that, but if you look at when that report come out, right, it was kind of interesting. It dropped right down into uh, 650 on the SPY, right, and then right up to the TOS expected high of the day, right? So nice, just shake out in there, and that was some major money changing hands in the last few minutes of those zero DTE options. Don't kid yourself, that was literally billions of dollars that switched hands during that little shake and bake there. And then as we look at where we are, right, ES all-time high again in this overnight session, just a little short of it yesterday. So we're opening up. If we're to open up above, uh, basically 65.42, right? We're going to be opening up a all-time highs. We're about, you know, 11, 12 points above that right now. And then looking at the NASDAQ, right, it would need another um, 65, 66 points right around in there to get the all-time high. So that would be, in unison. But if you look at the range of these daily candles, right, you could get it, but I don't really want to see a streak up at these all-time highs, and then I don't want to see a large expansion bar on the daily candles, I guess is what I'm saying, into those, because that could be, well, I guess we're day traders, we just react to what we have, but there's a high likelihood that that could turn into a look above and fail. And we'll get into some of that here in just a second as we go through positioning. So yesterday's action, look at it. Everyone except for the Dow, right, is above yesterday's value area, above yesterday's settlements, and going up to highs. We had salmon run trades and everything except for the Russell rate. That just means that's the way we classify it here, as trades that went off above the bell high of the day before the session closed, right? So those traders are potentially out of position for holding a long into the overnight session. So let's look at positioning. All things being equal, we are right now at the expected high of the move of the day for uh, the SPY, the ES, the SPX. If we were to open it up now, right, we'd be opening up right around that expected high of the day, right around this 65, 41, 42 area. If you look at the Qs, we're right around the expected high of the day for it as well. Doesn't mean that these things can't be breached, but you need to see the VIX dropping, right? So. Um, Title of my video is PPI-Dead, CPI tomorrow, meaning that that was really uh, not only did we not get an inflationary print on PPI, right? We got a deflationary print, right? Meaning prices were lower than they were before, right? So people trying to move inventory, that's usually not a good sign. Uh, you know, the Fed has lots of problems in life, right? But believe it or not, deflation, right, is a bigger problem than inflation, right? We can't have spiral inflation, obviously, but uh, when people think that they can, buy something cheaper tomorrow than they can buy it today, there's no sense in buying it today, right? So what does that do? That slows down the economy. So this is just one print. I'm not going to get too excited about it yet, but the Fed had that, higher for longer. and their whole objective was to have their rates slightly above the rate of inflation to have pressure on it, right? To slow it down. There's a lot of other things that have been going on lately, right? So we'll see what that gets. But the big read tomorrow is going to be CPI. So I guess what I'm trying to say in this long-winded speech here, or essay, or whatever you want to call it, is that there's a major print tomorrow morning. I don't know if there's going to be appetite to sell the VIX today, right? To drop it to new lows. There should still be a little bit of anticipation, a little bit of leeriness on the side of the VIX, but we're day traders. Just watch it and see. It's going to be hard to keep pressing above these highs that we're at. You might get a flash of the pan, like a quick run up and then a slow bleed down the rest of the day. But in the indexes, if we print a marginal lower low in the VIX. But what should happen is the VIX kind of gets back up into yesterday's range, and at the very least, right? And it should be just as worried about tomorrow as it was coming into today. Uh, Now, does that mean it will happen? We will find out. So what I'm gonna, and I do want to talk about how you read some of these levels, right? So the call wall uh, for is down here at 650, right? The call wall for the week is at 652. We're currently trading 653. By a positioning standard, that means that we are overbought, right? Prices are trading higher than they should be, looking at the SPY. Uh, and then looking at the uh, SPX, right? You've got the call wall that's all the way up to 6,600. That means that we could go up another 90 points in the ES, right? So there's disagreement in traders that trade the SPY and the ones that trade the SPX. Um, there is really nothing too much above um, 65.55 in the SPY, right? So, um, can we get those? It'll be hard. So, I guess what I'm trying to tell you is you're torn here on that. And one thing that we've noticed, we are above the short strike of the 65.05 in the cash market. I'm going to zoom into here. This pink line on the cash market, that's the JPM short calls that expire at the end of this month. What is, probably a 60% possibility is that we spend a little bit of time, and we'll have to see if today and tomorrow is it or not, but we would end up coming back under 6,500 and then accelerating to the downside, right? That's a 60% possibility between now and the end of this month, right? We're gonna so keep that in mind. So as long as you're above 65.05, you can still keep leaning long and watching it. But if we start trading below 65.05, right, and we haven't really been above it, right, that much. So today is day one, maybe. If we can hold above it the whole day, and then we'll see if it might take next Wednesday when the Fed meets that we finally fall below it. But I want to start planting that seed in your head that you don't want to be a buyer of the market if we spend several days above 65.05 in the cash market and then we start dipping below it. The dealer is going to have to react swiftly, right? You're going to be, and that's your flip point. Uh, for the daily candles, not for day trades, but daily candles. And you're going to want to watch. You start getting opens and closes below that, and that should lead to your acceleration as far as day trades go. Uh, Keep that 6,500 to 6,505 on your radar. Box it out until the end of this month now. So again, we're torn on the SPY and the SPX. As far as SPY goes, we are overbought, right? Meaning prices should come back down. Not a lot, but you're looking at 25, 30 points overbought at this point in time. And if you're overbought there, you should, dip a little bit lower than that. Um, and then the expected move of the day is at 647. That would be about 60 handles down lower than we are currently trading, but uh, 650 is your bogey, so we could end up getting between 650 and 651. I think pretty easily at some point today, potentially. Looking at the Qs, right? We beat up the S&P 500 with SPY and the SPX. Uh, the Qs, just like the cash market, uh, you know, the SPX, right? We could go another 90 handles higher without thinking about it for the cash market on the S&P 500. For the Qs, we could end up getting up towards 600, right? 590 is it for this week. So remember, every dollar is around, let's just round it to 40 points. So you're looking at, uh, for this week, you could still go another $6.50 higher, right? So that would be 260 points, basically up to this 590 uh, is what you would be looking at. And then another 400 points after that. So you're looking at 660 points higher than we're currently trading. So that would put us at 24,000. Let's just call it 550, 540, right around there. That's where this call wall is. So there are your upside limits if you can maintain the SPY over this. So what I'd like to see for some day trades in the next 5 to 7 to 8 sessions, right? I'd like to see us touch 600, and then I'd like to see us probably have like a on the ES. I think you could have a 250 point drop after touching 600. Uh, so we'll see if that's on the table. See if we can get up there first. But keep in mind, all the stuff I've told you to start paying attention to. The closer we get to the end of the month, the more all this is going to come into play, and we should get some very good volatility heading into uh, next week now, right? We should have no more speeches from the Fed and whatnot. So starting off, we're around the high of the day, so let's see what the opening print can do. Can we push it up past what's supposed to be the high of the day today, or are we just going to mean revert heading into tomorrow, right? My guess is we could play a little keep away up in this bar, and I always say, watch this 8:30 to 9 o'clock bar. Just mark the highs and lows of it until you get out of that. Expect that to be the range into the euro close. I hope this helps. We'll see what Jack's looking at next, and I'll talk to you tomorrow.